My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to America. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach, maybe do a little coaching. So call me at 1-800-743-CBC or tweet me at Jim Cramer. Now, I always tell you, from the beginning of the show, almost 15 years ago, I said, you got to avoid the battlegrounds. It's hard enough owning the stocks of companies with obviously great fundamentals, but a battleground with you're met with infiltrating fire, interstitial machine gun madness. Count me out. Too much effort. Sometimes, though, you got to take a stand. In a market like this one, where the bullish animal spirits can bowl anybody over, including today, Dow inched up 30 points, S&P advanced 0.29%, NASDAQ came 0.44%. Some battlegrounds, even for me, too tempting to ignore. That's why I've been taking a stand with Tesla. And why I've gone back and forth with Netflix, two of the biggest hornet's nests of our time. So what separates a Tesla, a battleground stock that I feel compelled to champion, from a Netflix, which I've lost conviction in? It championed it for years at lower levels. Okay, all my career I have been fascinated by companies with vociferous bulls and ferocious bears. If only because they can be so entertaining. Three things distinguish these stocks from regular run-of-the-mill equities. First, they're cult-like.
House of pleasure.
I mean, you got people who buy them because they love the product, not the earnings, and the product transcends simple analysis. There is no such thing as a price-to-coolness ratio. You either drink the Kool-Aid or you don't. Second characteristic of battleground stocks, potentially troubled financials. The real Verdun-like slugfests tend to have terrible balance sheets that can never be fixed by simple operating earnings, only by raising capital. Third, battlegrounds tend to have charismatic leaders. Now, I've had the privilege of meeting Reed Hastings, the CEO of Netflix, and he is charismatic. He's charismatic as all get out. The genuine item. Someone who's practically inside my head when he sends me what to watch on Netflix at night. Of course, he sends millions of other subscribers the same emails, but I always think it's coming directly to me. However, nobody is more charismatic than Elon Musk. For better or worse, the guy's one of a kind. Musk's a walking charisma machine, ordinarily entertaining and fun-loving and critical to the point of scathing. Sometimes I think he gives me a run for the money as the most sincerely insincere man in North America. Other times he comes off like a true believer. He eviscerated me once at a dinner party. It was different. So let's put both Tesla and Netflix through these three prisms. Now, we're going to start with Tesla because I need you to understand what converted me from an agnostic skeptic to an outright bull. About 3 months ago, my eldest daughter got a chance to drive a Model 3 from Oregon to San Francisco. She just sold her beat-up used Ford, she's definitively non-car person. I know she felt trepidation about the battery and the 600-mile trip. But within the first 100 miles, she called me. That in itself is exciting. To tell me how much she loved being behind the wheel of the darn thing. She's never, ever expressed even a whit of interest in any other vehicle. Now she's bragging about driving a Tesla. I told her that I'd driven one years ago and loved it, but never thought that much beyond that. She had two words for me. Buy one. She took down all the features she liked, especially the widescreen, but nothing mattered more to her than the flatulence button, which she thought was hysterical. About 2 months later, and I too found myself on the West Coast with my wife and another fabulous husband and wife couple who could not wait to put me in the Goldwing Model X. My wife, Lisa, loves cars. Oh boy, is she ever a car person. She'd be crazy. And she was immediately smitten. Now, I have to admit, I love the whimsical nature, the handling, the Goldwings were cool. The drive was fantastic. What did she love? The flatulence gimmick. Oh, but she also, maybe like mother, like stepdaughter? But she also dug the come hither button that inches the car towards you when some clown parks his car too close to your machine. I felt the tug. Then Tesla introduced its pickup truck, its Cybertruck, which I thought was ugly as all get out. The press conference, borderline disastrous. The company's lead designer threw a rock at its unbreakable window and it cracked. I figured, okay, so much for the Cybertruck. But then we saw the demand, the huge number of deposits, and it's off the charts. No accounting for taste. That stunned me. I decided then and there, that was it. I'm done. I can't fight it anymore. I wanted the Kool-Aid myself. What about the financials? Ooh, the bears are always telling us to be very careful because Tesla's got a hideous balance sheet. So I checked in with one of the most skeptical CFOs in the world. You know what he said? He told me that Tesla could raise $2 billion in a heartbeat. This is not a company that's going to have trouble raising money. Plus, even the bears recognize that Tesla's about to have an earnings breakout, perhaps as soon as next year. It's the only car company with any real mojo per share. The remaining worry, the solar panel business. Tesla spent billions acquiring this from Solar City, and I wasn't going to play Solar City. And for years, it seemed like a terrible bet. But then my wife sent me an article this very morning about how Tesla's solar roof tiles are now as cheap as normal roof tiles. They're guaranteed. They look like normal tiles. And she wants me to get them, so we're getting them. If you believe in the product and you're not worried about the financials, all that's left is the leadership question, which brings me to the outsized personality of Elon Musk. Normally, I don't mind flamboyant CEOs, but I hated how Musk would tweet like a crazy person, taunting both the analysts and, maybe more important, the SEC. Fortunately, all that ended when Musk agreed to stop his incendiary tweeting as some weird settlement with the government. Even better, on that last conference call, he revealed his true rigor without the sardonic quips. Musk, it turns out, is a great CEO when he can get out of his own way, and that seems to be what he's doing. Cold product, check. Sound balance sheet, check. Charismatic leader, check. Check, please. If you're going to invest in a battleground stock, Tesla's got all the ingredients of a winner. Contrast that with Netflix. Now, this weekend, we watched the new Scorsese movie, The Irishman, along with nearly everyone else in America. And you know what? I didn't love it. Great acting, no commercials, but it didn't really click for me. Then while perusing Netflix, I stopped on that Spy with Sacha Baron Cohen, and I binged like crazy. I barely slept. Maybe I didn't. Netflix makes some of the greatest content on earth, so it's got the cult product thing nailed down. How about the financials? Right now, there are just too many of these streaming platforms, and that's jacking up the cost of content. With all the new competition, the cost of programming could keep escalating, like sports. And if that happens, Netflix will simply be a good product, but not a good stock. Finally, there's the charismatic leader, Reed Hastings. I think he's a genius, visionary. Unlike Elon Musk, Hastings doesn't have a long history of self-sabotage. But at the end of the day, Netflix only has the cult product thing check and the charismatic leader check. I'm still concerned about the actual fundamentals in terms of the money that they need because of the wave of new competition and the rising cost of content. Right now, Wall Street is split on this one. Some predicting acceleration in new signups, some see a slowdown or even a decline, and that's why it's a battleground. And I can't figure it out. I can't figure out who's right. Hey, this one is indeed too hard for me. The bottom line, sometimes it's worth getting involved in a battleground stock, but only when you have a truly staggering level of conviction. And that's why I'm now a zealous convert, a true believer in Tesla. But it's why I can't commit in Netflix. John in North Carolina. John.
Jim, I always appreciate your comments and analysis, and I want to thank you for taking a call from me for what is either the 8th or 9th time.
Woo! There you go.
Yes. Hey, Jim, I bought Boeing after the first 737 MAX jet crashed, sold it for a nice profit in February, bought it back on a dip in August, but after a 6.5% decline in the past 2 weeks, and boy, it was down a lot more than that this morning, coupled with the continued grounding of the 737 MAX, and what we heard from hearings and testimony yesterday, that is, I'm quoting, impossible to tell when the 737 MAX will be recertified, resume flights. Should I sell or hold on to my shares?
I think you can hold on, but I have to understand it's going to be rocky, and we keep getting this delay, and that's in part because who wants to check off on it? I'm not saying it's a nothing burger. I am saying that you're going to be I think you'll be in a holding pattern for a long time, and then you have to see how much you got to worry about the cash flow. I think there are better ways to invest in aerospace, but I'm not going to tell you to sell it. It is a great American company, and it will come back. It's just going to take some time. How about Isaac in Ohio, please? Isaac.
Booyah, Jim.
Booyah.
I've always wanted to say that live on your show. Thanks for taking my call.
People like to say it. They say it to me all the time, and I love it. What's going on?
Well, I'm an owner in CrowdStrike, and with their earnings being the best they've been since their IPO, and analysts even raising guidance to $70 range, I'm confused why it's dropped so about 15% since the report.
Too many players trying to take share from each other. Too much money being spent to get customers. It has become crowded at CrowdStrike. I agree with you that it's terrific cloud cybersecurity business, but everybody wants in, and that is eviscerating the potential margins. Not yet. All right, now, I am fascinated by companies with ferocious bulls and angry bears, and I am now bullish on one battleground stock, Tesla. Netflix, call me, as Will Force would say, skeptical. I made money today. It's been a real volatile year for that Palo Alto Network, speaking of CrowdStrike. But what does 2020 have in store? I'm going to talk with the CEO. Then, understanding millennials might be hard for Wall Street, but I spotted some of the key trends in the age group in the unlikeliest of places. I'll reveal. And yesterday I told you one of the most bankable themes in this market was 5G. And tonight I'm sitting down with one of the companies that can bank on that trend. You might miss my exclusive, and it has many more things besides 5G, with VMware. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.